Coming up on Market to Market. Getting a bite at the supermarket may put more of a bite on you. Crop scouts find a bumper crop while drought worries loom over much of the country. And one family is answering the question of how to pass the farm on to the next generation. Those stories and market analysis with Virgil Robinson next.
Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success. This is the Friday, August 23 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Some economic indicators are pointing to growth in the second half of this year, but other sources tell a different story. According to the Conference Board, the index of leading economic indicators rose 0.6% in July. The figures indicate there will be job and economic growth over the next 6 months. Despite the encouraging news, the Labor Department recorded higher unemployment levels in 28 of the 50 states last month. Nevada, home to a large number of service sector jobs, saw unemployment climb to 9.5% as the nation's rate fell to 7.4%. The Federal Reserve Board released its July meeting minutes this week, revealing Fed members feel the time is fast approaching to slow down bond purchases. The news pushed average rates for fixed mortgages to their highest level in 2 years. Wall Street also was unhappy by the notion of bond purchase curtailment, and the Dow Jones Industrial Average spent the week moving downward. According to USDA, the price of raising a child took a jump of nearly 3% last year. Federal officials say it will cost more than $300,000 over the next 17 years for food, shelter, and other necessities associated with child rearing. And in the near future, getting a bite to eat is predicted to take a bigger bite out of your wallet. The Department of Agriculture's latest numbers indicate that the price of food will not increase as much as earlier projected. USDA expects food prices to rise only 1.5% to 2.5%, which is half of what government officials had previously predicted. USDA economist Ricky Volpe says a number of factors have contributed to the less than anticipated increase.
We were initially looking at 3 to 4% increase, which was above average. That was, before we knew that we were going to have these lower fuel prices and the strengthening U.S. dollar, the overall improving economy. We are still looking at some food prices that are going to go up a little bit more than average and some that will go up less than average. But on the whole, we're looking at moderate food price inflation for the year, which is good news, especially given the initial outlook we had when the drought broke in July and August of 2012.
One of the places last year's drought had a big impact was on the price of beef. Decreased corn and soybean yields led to higher grain prices. The higher feed costs forced farmers and ranchers to cull their herds, which created a short-term supply glut. But over time, the smaller supply has pushed prices higher at the meat counter. While beef prices won't be increasing as much as originally expected, the cost of beef will remain high.
We're now looking at beef prices to increase between 2 and 3% on the year, but I should note that many beef prices have reached record or near record levels across supermarkets in the U.S. So inflation for the beef category may be small in percentage terms, but it's not as if consumers are seeing any relief there.
Volpe says consumers can expect to see an increase of 2 to 3%, if not more, for eggs, as well as a 3 to 4% rise in the price of poultry. However, according to Volpe, consumers will see their dollar go further in the dairy aisle.
We were initially forecasting pretty strong price increases for the year for 2013, but it turns out that we saw most of the impacts of the drought at the tail end of 2012. So we're now on track for very moderate price increases for dairy for the foreseeable future.
How to pass the farm on to the next generation is a puzzle as old as time itself. Inevitably, the question will be asked, who's next? According to Michigan State University, discussing and planning for the evolution of the family farm should include a close look at the 5 Ds: death, disability, disaster, divorce, and disagreements. The idea of discussing these important topics can foil the best laid plans. But as Mike Tobias of Nebraska NET News and Harvest Public Media found out, sometimes the best way to pass on the family farm may be no more complex than a handshake, a hug, or a parental nod.
Hang on a minute. What do we got in here?
It was the summer of 2000. Kelly and Riley Skurdlant had a lot on their minds. At this moment, whether a skunk was hiding inside irrigation pipe. But long-term, they were both thinking about the future of the Skurdlant family farm.
Come on, Mischief!
Riley was 18, fresh out of high school with a passion for working with cattle and desire to do something different than most of his classmates. That's stay in agriculture.
A lot of people tell you if they could sit in an office and make money, they would, but I'd rather work from sun up to sundown for it and sweat it out. Come on, girls!
Kelly, Riley's dad, wanted this to happen, just like he took over the farm from his father. But Kelly had concerns. Running a farm was getting expensive. Fuel, fertilizer, and equipment costs were going up.
I think you'd make a very good farmer. But it's tougher and tougher all the time for these young guys.
There was a lot of uncertainty for Riley and the Skurdlant farm. Flash forward 13 years. Riley is farming with his dad. After high school, he took community college classes and had a series of full-time jobs, all ag-related, most fairly close to home. Most recently, he was working with a fertilizer plant in Bladen. In one way or another, he also stayed involved with the farm, gradually starting to make more management decisions, especially involving livestock. The Skurdlant family farm became his full-time job at the beginning of 2013, taking a role he describes as primary operator and secondary manager.
Dad finally decided he was getting too old to do a lot of it and wanted to slow down just a little bit. So I think the last couple of years I've been planting a lot for him, and a lot of hours at night after I'd worked all day over there, I'd come home, plant half the night for him, and I think he could see it was kind of getting worn down on me and my family and everyone else. So I think it was time that we did something different.
Certainly having him back on the farm, really, literally back on the farm, is a big difference. And although we are at times in conflict about management, and probably not as much conflict as he thinks, but it's just amazing to have him here.
Kelly, in his early 60s, calls this an evolution of the Skurdlant farm, similar to the way he took over the operation from his father. It's a typical way farms change hands, and the typical way young people enter agriculture.
Without a parent or a child relationship or a grandparent or an uncle or a neighbor or someone to help get going, it's really difficult to jump into this. So I would be more than...
Geller's been helping young farmers get started for several decades, a time during which there's been a trend toward fewer young people entering agriculture. In 1982, 38% of principal farm operators had less than 10 years' experience. By 2007, that number was down to 26%. But Geller has a feeling that trend may be changing.
I have a hunch that we will see an increase, or at least a stabilizing of the younger people coming back in. I think a lot of it has to do with the economics of the whole situation, or especially in the crop side of things. Profits have really returned to agriculture in a way that they haven't in the last 30 or 40 years.
I think in this area there are probably more younger guys Riley's age, in that 30 to 35 range, that are staying in ag.
That's just an amendment. It can be an amendment to the lease. You just add it on to what you have.
At a workshop for beginning farmers and ranchers, Angie Miller is talking about leasing pasture land. With rapidly rising ag land values, access to land is one of the big barriers for beginning farmers. Miller, an attorney who works with a beginning farmer program, says that's why it's important to have programs that help.
Nebraska is the first state to pioneer what's called our beginning farmer tax credit, which allows for a beginning farmer to have a 3-year lease with an established producer generally. The established producer gets a 3-year tax credit. The beginning farmer gets a 3-year lease and a foot in the door.
When I started farming, the thing to do was you go out and buy some ground. You buy the land and maybe share some machinery for a while and maybe rent a quarter or two of ground to go with that. Today, that buy the land thing looks like it's coming 5, 10, 15 years down the road before they're able to generate enough capital to come up with that down payment so they can cash flow that land purchase.
Land isn't an issue for Riley Skurdlin. The family has about 1,800 acres. That's large for a family farm in the United States. Here, they grow corn, soybeans, and wheat and run about 150 head of cattle. Now, the challenge is the transition, or evolution, as Kelly Skurdlin calls it.
I think it's the lack of communication that really is when we see transitions begin to fail.
Whether you're family relation, or even if you aren't family related, you need to figure out a way to talk about a lot of things. Expectations in the generations tend to be quite a bit different.
Transitions can be formal or informal. The latter, common in family operations, would probably best describe how Riley and Kelly are doing business.
There's just a lot of old ways of thinking and new ways of thinking kind of coming together that don't really like to agree a lot of times.
When you work together in this kind of an operation, I think you're going to have differences.
We're both not the best of communicators. It's going to be kind of fly by our seat of our pants, I think, really. But it's probably the most wrong plan you could have in place, but that's kind of the way we're going to go with it, I think.
We probably both have a quick trigger, but things never last very long between us. It's done and over, and then we go on and get the job done. So that's probably not the way you would have someone write it out on a piece of paper for you to do this, but I think it's going to work for us.
For Market to Market, I'm Mike Tobias.
Next, the Market to Market report.
Earlier this month, the USDA released its best guess on the size of the 2013 harvest. While the numbers were lower than the June report, if realized, the corn harvest will hit an all-time high and the soybean harvest will take second place in the record books. Crop scouts have been touring the country this week to get an up-close and personal view of how things are shaping up. But the fear of a drought striking the crop in its remaining weeks continues to haunt farmers across the country. Dry conditions in western states have fostered numerous forest fires. This week, the Interagency Fire Center in Boise, Idaho, reports major fires burning in 9 of the lower 48 states have consumed nearly 1 million acres. Western wildfires continue to make the summer of 2013 a dynamic and expensive one. Nationally, there are 50 active wildfires being battled. The wildfire preparedness level in Idaho is at a 5-year high. More than 1,200 homes remain empty because the Beaver Creek fire continues to burn near the resort area of Ketchum.
We've had super support from the ski area. They have some very high capacity pumps at the top of the ski area, so we're protecting the power supply for those pumps because if the fire does approach there, we're going to be relying on those.
Temporary pop-up cities have been built to support those battling the flames. More than 1,700 people have been assigned to fight the wildfire.
We refer to this as Main Street. This is where all the action happens. And it's truly an office situation with documentation and finance, everything that goes into communications and radio.
And ground crews are getting assistance from the air. Farther west, another fire near Yosemite National Park is threatening 2,000 structures. Across California, 7,000 firefighters are battling fires that have already burned 100,000 acres. As those uncontained fires still burn, the price tag spent by federal agencies already has topped the $1 billion mark. The U.S. Forest Service is diverting money from other programs to help pay for crews as forest fire season hits its peak. Much of the western United States is still locked in drought. The area of dry conditions is now shifting back into areas impacted last year, mostly in the Corn Belt. This week's drought monitor revealed nearly 60% of the contiguous U.S. is in some form of drought. That's up 2 points over last week, but still well off last year's mark of 77%. Some of the biggest increases in dry conditions were seen in Minnesota, Iowa, Missouri, Illinois, and now into Indiana. Crops that started the year in wet conditions have now gone to the other extreme. Stress is visible in the crop and water sources are drying up. The same area was observed as part of the Pro Farmer Midwest Crop Tour. The annual event took place this week as scouts looked at corn and soybean fields, and results closely resemble USDA estimates. The fact that crop maturity is behind last year and the Chinese were buying grain overshadowed Midwestern showers and promising scouting reports. For the week, September wheat gained 4 cents, while the nearby corn contract moved 22 cents higher. Tight inventories served to push old crop soybeans up 82 cents. Nearby meal prices increased almost $25 per ton. In the softs, cotton lost what it had gained last week and then some as the December contract fell more than $9 per hundredweight. In the dairy market, September Class 3 milk lost 84 cents, while the October contract was off 29 cents. Over in livestock, October cattle fell $1.20. Nearby feeders lost just $1, and the October lean hog contract posted a weekly loss of $1.62. In the financials, the euro gained 47 basis points against the dollar. Crude oil fell almost 90 cents per barrel. COMEX gold advanced $24.80 per ounce, and the Goldman Sachs Commodity Index lost almost a point and a half to settle at 648.50. Here now to lend us his insight on these and other trends is one of our regular market analysts, Virgil Robinson. Virgil, welcome back.
Thank you, Mike. Nice to see you.
Let's get right into it. Let's talk wheat. Where do you think we are sitting? Crop quality condition report and worldwide stocks. Where do you see this wheat market headed through fall?
Well, I think a quick review of supply and demand is appropriate here, I think, Mike. First, the recent WASDE is forecasting that all wheat varieties globally, we will in fact enjoy record production. Now, that's part of the discussion. The other part is they're also forecasting an increase in disappearance to the extent that the stocks-to-use ratio, which you oftentimes hear us use, which is kind of a proxy for supply. Bigger the ratio, more supply. Smaller the ratio, theoretically smaller supply. Actually declines globally as well as in the U.S. So I'm at wit's end here to explain the depth of the decline here in wheat futures, particularly since we've seen a real good start to our export program this year. Bottom line, I think it's a poor place to finalize the price of soft, hard, and hard spring wheat. I would defer that, if one can, to a later date. I think there'll be a better opportunity.
Now, in your opinion, as we look at the shrinking stocks-to-use ratio over last year, is that primarily a consequence of high-priced corn and feed producers switching to wheat?
Yeah, I think that's some of it, Mike, and I think it's improved diet, including some different pastries and various items of that nature that have increased wheat disappearance. But certainly, soft red wheat spent an extended period of time below the price of corn. And in my mind, there was no question in select areas that captured the feeders market.
Certainly. It was good to have something to feed.
Yeah, and that price differential has just this week, again, realigned itself. Soft red wheat is only a few cents above corn now in select markets. So it has kind of, again, re-entered that picture as a feed ingredient.
All right. Now, in wheat, we saw a few cents increase on the week. Soybeans, big story. Old crop and new crop both had substantial up weeks. What do you attribute it to?
Well, the crop year is going to end now, the end of the month, Mike. So we'll be, concentrating on 2014 here in the very near future when you refer to new crop. The Chinese continue to buy soybeans, not only from us, but from other sources, particularly in the southern hemisphere. The old crop supply, I think, is well documented. It's relatively tight, Mike, and there is obviously some concern about recent weather and its effect on yield, which I think was documented by the Pro Farmer Tour this week. The wheat yield as well as the harvested acres, both those factors remain moving targets as they do in corn. So there is concern in next week's weather forecast, at least here on Friday evening, is concerning with regards to some type of dome system or dome formation covering much of the middle part of the country and creating some hot and generally dry conditions.
And now, is that especially a concern this year with the lateness of the crop planted? I mean, is the market really going to be trading that next week? Is there anything on the horizon that they might trade other than weather?
Historically, the month of August, the first part of September is the pivotal time for creating soybean fill and bean size and other vital factors to production. And this year clearly will be much the same, extended into I think, much of September. So, if we'd happen to have a wonderful growing season in September and avoid an early frost throughout the primary corn and soybean belt, yields could certainly change from what Pro Farmer found, and they did note that with the variance factor, plus 2% either way from what they forecast today, and I think plus 1%, plus or minus 1% in corn. So they have noted the volatility that weather yet plays in this marketplace.
And the trade is just going to continue to focus weather until combines start to roll and we start to see what the yield actually is.
Yeah, I think that's probably true, Mike. And as mentioned in your pre-report here, the Chinese continue to be a dominant factor in soybean purchases, and they have aggressively acquired bean inventory, not just for immediate delivery, but for delivery in the future. So, perhaps there's some concern about the size of their crop, or clearly their economy is shoring up, beginning to firm, beginning to be more consumer-orientated. And I think the prospect there regarding agricultural commodities and other goods and services remains pretty darn good.
So the demand picture looks pretty bright for soybeans.
Yeah, it does from my perspective.
Well, now let's talk to us about corn. We did see another run-up in prices this week. Same weather concerns as we are seeing in beans. Does the demand picture look as solid on the corn side as it does on the bean side?
Well, if we were measuring that prospect by export business and export sales, not so good. Cattle on feed report this afternoon, Mike, fewer cattle placed last month and quite a few less cattle in feedlots at present versus 1 year ago. So from an animal consuming unit perspective, there's some concern there about protein disappearance. Now, on the other hand, there are indications that the hog herd is beginning to grow, albeit quite slowly, as well as the poultry industry. So we've got some good news in terms of protein consumption in those two camps, a little more concerning in the beef in the live cattle markets.
Now, with crude oil prices being where they are and RBOB staying relatively high, is ethanol going to be an active consumer of corn through the fall and into next year, do you think?
Yeah, I think, again, we have the blend wall issue that looms here, and what could potentially be some adjustments from the EPA regarding mandated usage. Now, I can't speak to that issue because I don't know. And then secondly, even if I did, it wouldn't be the correct domain. But that is a concern moving forward. The value of our dollar regarding the potential of perhaps exporting some of that or continuing to export that product remains a good, strong possibility. So regarding usage, at least for the immediate future, Mike, I think we'll probably use something approaching 5 billion bushel of corn to produce alcohol or ethanol in the up and coming, the new crop year, 13-14.
Okay. Now, you touched briefly on the cattle on feed report out on Friday. As you mentioned, lower placements. Any shockers in there? How do you think the trade will interpret the report come Monday?
Well, the number placed on feed and the total number were well below pre-report estimates. So if that serves as a shock, then so be it. Calls shortly after the report were out for higher cattle futures come Friday, and I certainly wouldn't dispute that. I think equally as important, however, is the fact that when measuring disappearance, which is difficult to do, I oftentimes will refer to the cold storage report, which is a monthly report that's awaited by the trade. And as mentioned earlier, beef prices, retail beef prices, are high relative to today's dollar, let's say. But disappearance month over month and year over year in beef, given those higher prices, was impressive in my opinion, as it was in pork. Total red meat supplies are below a month ago, below a year ago. So if that would be our only barometer of disappearance, in my mind, it would be very strong.
All right. Now, so that's going to bode well for live cattle futures. Is cash cattle market catching up, do you think, to where those futures have been trading?
Mike, you're referring to a basis factor there. And seasonally, oftentimes the basis in the fourth quarter of the year will kind of widen. I don't sense that as we visit tonight. And again, I think the demand for beef domestically and arguably for exports going to remain strong. If the dollar would happen to weaken, which I think over the course of the next many months, not Monday morning necessarily, but the next many months, I think it should continue to support the beef market. One of the other wild cards is the Zilmax issue and what implications that might have to finished cattle and the finished cattle industry. And frankly, I don't know.
Right.
But certainly it could be a factor, and it could slow the growth of cattle and slow the pipe in terms of supply. So that's something that also needs to be factored in to a livestock man's budget and or his objectives.
Certainly. And now real quick, your thoughts on feeder cattle as the market stays strong for fats. We'll continue to see strong demand for feeders as well?
I think so. The supply situation's been well documented, and if we sustain a fairly strong live cattle market, I think it will underpin the value of replacement cattle.
All right. Now real quick, we did see a bit of a move downward in hogs. Just the market adjusting to the levels we've been seeing lately?
The October contract pretty deeply discounted to the cash index. I don't think this is a particularly good hedge right here. If I were going to do anything, I'd look at that December and the first quarter of 2014 and consider some type of put strategy and create some type of floor.
Thank you so much, Virgil.
Thank you, Mike.
That wraps up this edition of Market to Market. But Virgil and I will continue our discussion and answer some of your questions in our Market Plus segment on our website. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed and Facebook account exclusively at the Market to Market website. Be sure to join us again next week when we'll take a close look at the legacy of FDR's popular New Deal program known as the Civilian Conservation Corps. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success.